Well, I'm focused. I think that there's one good thing. I believe in clean money. I believe in digital capital. I believe that there's $450 trillion of wealth tied up in physical and financial capital assets that are defective. I believe, and I said this in Nashville a few weeks ago. I said that 450 trillion is bleeding off 3 or 4% of its economic energy each year. That means it's a $10 trillion inefficiency in the economy.
In a recent interview, Michael Saylor explained the significance of cryptocurrency and ran through the future trajectory of the crypto market, including its political implications. Saylor argues that Bitcoin is not just a digital currency, but instead is a revolutionary technology with the potential to reshape the global financial market. At the time of this discussion, Bitcoin was trading at just below $60,000. Saylor highlights that currently there are 19 million coins in circulation out of a total fixed supply of 21 million, pointing out that Bitcoin's value proposition is its scarcity, which makes it a superior store of value compared to fiat currencies. Make sure to watch this next clip where Saylor explains the importance of basing an economy on a sound asset, such as Bitcoin. Also, if you enjoy listening to crypto-related content, please show your support by liking and subscribing to this channel by following the link in my bio, and get access to my free daily crypto updates and expert predictions direct to your inbox. Each newsletter contains market intelligence, on-chain data and latest updates from experts in the crypto space. All of this is available completely free of charge. Signing up only takes a moment and you can always change your mind later on. Now back over to Michael Saylor.
There is a friction, right? There's a loss of energy through that vibration. And then the frequency is referring to the rate of vibration and the time and the duration over which you hold that asset, that material. What are you holding it for 100 years? Are you holding it for 100 milliseconds? And once you start to think that way, well, then a lot of things become very clear, right? There are some capital assets you can't hold very long. There are some, and there are the rate at which you dissipate economic energy is a function of the frequency with which you're vibrating, and then also the entity doing the vibration and the nexus, right? A church can move money through 100 different assets back and forth tax-free. A university can hold the same property for 1,000 years tax-free. Your family can't, you see. And so when you start to understand the solution to the problem is different for an individual versus a trust company versus an operating company versus a sovereign entity, depending upon what nation you're in, what city you're in, what neighborhood you're in, and whether or not the capital is oscillating in the physical domain, the financial domain, or the digital domain. And of course, you're not going to get that speech out of Charlie Munger or Warren Buffett or any economist, right? Their world is very, very constrained based upon what they learned, and they engage in lots of discussions of faux metrics, which are meaningless in their constrained synthetic world. And as long as their world consists of other people that live in the same world, then they have these synthetic, faux conversations that don't at all relate to the greater universe, but they just can't see the greater universe because they've just grown up in this very synthetic, idealistic, theoretical world that that's all they could imagine. Because just like doctors didn't understand germs till they had a microscope, until you have X-rays and microscopes, you think that that illness comes from demons and spirits, but because you imagine stuff, superstition, you need an explanation for why you're dying. So you have to imagine the God struck you with the evil spirits and a curse. And then when you actually can see the cells breaking down, now you know you're dying of something very, very precise. You know why you're dying. It's because you're drinking too much alcohol, or because someone cut you with a rusty blade and you're infected. And at that point, you're on a path toward a solution. And I think we're at this inflection point, moving from economics as art, colored by superstition and religion and ideology, And we're crossing this boundary where economics becomes science, and it's informed by mathematics and engineering, right? And the scientific method. But, you have to date that, in my opinion, to January 3rd, 2009, when Satoshi unleashes Bitcoin, and there's a singularity, and all of a sudden there's actually engineering, physics, and mathematical principles that are starting to spread in a viral fashion through the economy. And it was like a nothing, and then it's $1 million fire, and then $1 billion network, and then a 10 billion, then 100 billion. Now it's a $1 trillion network, but still $1 trillion is 0.1% of the economy. So 0.1% of the economy has clean money, and 99.9% of the economy runs on dirty, toxic assets that are defective, that are operated by people that don't know they're trading defective assets. Because how would you know if you'd never seen clean? How do you know that you're dirty?